In the news this week, one of the most important metrics we look at is jobs. We'll find out what's happening with jobs, manufacturing, and the services sector. Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. As for the biggest story of this economic week that turned out to be even bigger than expected, according to the government's official numbers, the U.S. economy pushed back hard in September against recent signs of weakness in the labor market, adding a lot more jobs than anyone had forecast. On Friday, the Labor Department reported that non-farm payrolls soared by 254,000 last month, way up from both a revised 159,000 in August and the 145,000 jobs economists had projected. The official unemployment rate ticked down 0.1 of a percentage point to 4.1%. Along the same lines, there was also greater than expected resilience evident in the August Job Openings and Labor Turnover Survey, also known as the JOLTS report. The August number beat the expectations of economists, who also were looking for job openings to come in at 7.7 million. Despite the better-than-expected results, job openings remain more than 30% below the peak reached in March 2022. According to the Labor Department, there were roughly 1.1 jobs for every unemployed person, which is nearly half of the number available 2.5 years ago. Earlier in the week, the Institute for Supply Management reported that its Chicago Business Barometer for September came in at a reading of 46.6, slightly higher than projected, but once again, solidly in contraction territory. The barometer outperformed economists' expectations by 0.2 of a point. However, the sub-50 reading makes September the 10th straight month the metric has indicated that manufacturing activity in the region is contracting. On Tuesday, ISM revealed that its Purchasing Managers Index landed at 47.2 in September, same as where it fell in August. The reading was a bit of a disappointment for economists who expected to see it come in at 47.7. It's also the 22nd time in the last 23 months that manufacturing PMI was in contraction territory. However, on Thursday, ISM was back to report significantly better news from the economy's other dominant sector, revealing that its services PMI in September jumped to its highest level in 1.5 years. According to the data, ISM Services Index rose to 54.9 last month, nearly 3.5 points higher than both the August number and the projection of economists. Among the most upbeat of the metric's component measures was the New Orders Index, which climbed to 59.4, its highest level since February 2023. On the downside, the measure's Employment Index not only fell for the first time in 3 months, but dropped into contraction territory, tumbling a little over 2 points from 50.2 in August down to 48.1. That's all for now. Make sure to join us next week when we'll continue to keep you informed about what's happening in the economy. This is Devlin Steele for Augusta Precious Metals, signing out.